Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Monday, the 30th of October. All right, now as we edge towards Halloween, the dollar, holds near 150 yen, right? The BOJ, well, it's starting to sort of drift through there. So maybe, is there a chance the BOJ sort of intervenes? I don't know. I don't think so. Still, the dollar quite strong. But this week, we might find a few holes in the dollar, and that may lead to the BOJ jumping in. But the key theme here is a data deluge awaited. Now, what are they talking about? Well, I'll show you the calendar. There is a huge amount of data this week. This is possibly one of the busiest data weeks of the year. We've got activity across all sessions, the Asian session, European and North American, right? So I've just got the data page here, set the sort of the two top tier numbers, right? And even with that, there's a huge amount of data. If I took this back to like the third tier as well, there's even more data, right? And the little data, the little building blocks can sort of come into play. But the key components here, for my liking, that the market will be, hugely focused on. Obviously, all these numbers here with the red clock, they're sort of generally high impacting numbers. And you'll see a whole range of those all week. But the key ones, there's three central banks meeting. You've got the BOJ Tuesday, right? Do I expect anything there? Not really, but you're always sort of waiting and possibly looking for something to happen. As you go through, we've got inflation numbers, etc., out of Europe. But if we scroll down, you get into Wednesday, Thursday, it starts to get even beefier, right? And what I'm talking about is data that you can really hang your hat on. So once again, you come through Wednesday, the Fed down the bottom here, no change of rates expected, but you've got a whole heap of Fed data, UK data, like there's numbers dropping across the board here. So hold on to your hats as we go through the week. And then as you get into Thursday, amongst other things, we've got the Bank of England interest rate decision. No change expected there, but once again, the statement press conference can come into play. Swiss inflation numbers, Aussie housing numbers, German unemployment, and then you've got a bunch of labour numbers there and productivity numbers out of the US. And then obviously not last but not least, you're going to have a bumper Friday with the Canadian and the US non-farm payrolls due there as well, right? So you've really got to be paying attention to what's going on, right? And this comes back to sort of leading into what's been sort of driving the markets these days. And if anything, it's the, we've been seeing the bond market, right? Prices falling here today. So the yields slightly up. The bond yields have been whipping around like equity markets, right? And it's not unsettling, but you've just got to understand this thing is behaving very strong and having a major influence on the dollar. At other times, it decouples. Right? Are we seeing a strong dollar across the board here? No, it's pretty mixed, right? But the market isn't doing a lot today at the start. If anything, we've got a US equity futures slightly up. Okay, is that a risk on, risk off day? Once again, across the currencies, it's not doing a lot. Commodities overall a little bit lower. Okay, and so what we're doing is today, Monday, this is why sometimes Monday is not the best day to be trading. You're trying to sort of build the connections between the various financial markets, what's been driving the market, yields, US yields up, US dollar up, and vice versa. So at the moment, it doesn't look like it's doing a lot just there. Now, if I just come across to the charts, right, having a look here. Now, the dollar, it is angling topside, right? You see dollar Swiss coming back. Out of all the instruments, like dollar Swiss, obviously the Swissy being a bit of a safe haven play, it's come back. It's come back quite strong. So this was the catalyst last week when the dollar started to dip. It was dollar Swiss that was the lead. So keep an eye on dollar Swiss at this stage. Dollar yen, well, whilst there's a strong dollar, I can't see the BOJ doing anything. Dollar CAD, well, it's sort of edging up topside. Then you've got the sort of battlers down the bottom here, right? Euro, sterling, Aussie, and Kiwi. Now, they have been, I just widened out the scope of these charts so you can start, like you get a good idea. Like there's been pressure on the downside on these instruments for some time. Now, Kiwi, even a little bit more so at this point. But as we go through the week, you're looking at the US numbers to try and work out where momentum's coming from. does that match up with the other country-specific data like Euro, Sterling, Aussie, or Kiwi, and starting to connect the dots there? If anything, the bottom four have pretty good trend lines to be working with, sort of top side and downside. So if anything, the last week they have consolidated, which gives us a new support level to work with in case we do see strong US numbers. That could lead to a further leg on the downside, like the Kiwi sort of doing there at the moment. Dollar Swiss, plenty of room to move topside, as is the dollar index. But once again, we've been seeing these bond yields, US bond yields go up, but the dollar not moving. When you see that, it's probably ready to look for a move on the downside of the dollar. All right, so that's where we are, guys. It's an interesting week, right? So just scroll through your calendar, work out the various bits and pieces. I'll show you just here, give you an idea of the calendar. Once again, you wind that back to sort of like the third tier numbers, then the second tier and the top tier numbers. You'll find that there's a huge amount of data coming out across all time zones, right? So it doesn't matter where you are at this point. There's plenty to play for, and make sure you sort of keep an eye on the fundamentals as well. Like Tuesday, the yen, Aussie, and actually Chinese PMI, manufacturing PMI numbers, big day for Asia, and that rolls into the Japanese interest rate decision. But that's just one day, right? There's a whole, every day is chock-a-block like this. And you come through the European session and the North American session, it starts to overlap, and it's almost like there's too much data. But that's what you get in the first week or the first 2 weeks of the month. So make sure you're paying attention to what's going on, especially if you're holding positions, right? Generally speaking, if you are holding positions, what you're doing is, so you're looking at the yields, especially in the North American session around the US numbers, but you're keeping an eye on the equity markets and seeing what that does here with the currencies or commodities. You're constantly scanning across the market if you have got open positions, so you can manage them better. Let them run if they are in profit, or close them out if the market starts to turn against you. And that's what you need to be doing with the calendars, right? So it's all about paying attention to what could influence what you're doing. Now, these third tier numbers, sometimes they can influence. Obviously, more importantly, the ones that the market does look at very closely are the top tier numbers. And as you can see, this week, we've got a whole heap of them. Monday, Tuesday, Wednesday, Thursday, Friday. It's very rare that you see this many top tier numbers in a week, right? So no need to chase the market. Let the market come to you and see if we can poke the eyes out of it. All right, guys, have a good one. All the best. Cheerio.